Hello, this is Cryptolyze. I hope you are well. This Friday, 13 October 2023, we meet today to talk about CRV, the crypto of the heart. So yesterday I covered AAVE, the crypto due to AAVE protocol, which is one of the really foundations of decentralized finance. And today we are going to talk about the second pillar, which is CRV curve, and which is a little more particular. You will see that there are lots of things to see, and as usual, we will dissect it into two parts. A fundamental part, we will come back to what curve is, and then a technical part where we will project ourselves on the prices for purchase prices, sale prices, medium, long term, and it starts right away. To explain core, you need to understand what decentralized finance is. The principle of decentralized finance is to have people who interact with each other to make monetary transfers. On paper, it's quite simple. That is to say, I need a BTC, I have an ETH, I need to find someone who is willing to exchange a piece of BTC for my ETH. And that's simple on paper. But to implement, it's more complicated when you want to automate it and make it really pleasant to use. And that's why we have the pools of liquidity that are made available, which are generally groupings, as we can see here, of a certain number of cryptos. Here we have DAI, USDC, and USDT, which is the three hens on Curve, which is one of the best known at the level of Curve, which allows you to exchange USDC for DII or against USDT and vice versa. The big advantage of that is that we didn't find the person in question. But on the other hand, the big blockage is that you have to have liquidity. You need people who deposit DAI, USDT, and USDC in a smart contract, because it is a smart contract. To be able to make these exchanges and this liquidity. And that's essential. And that's why we talk a lot about AAVE, because AAVE, in fact, generates liquidity through deposits. Yesterday's video. And, in fact, it is mainly through liquidity. That means that people deposit their money on liquidity powders, which are available to make exchanges. These swaps in which we can make a USDT transaction, by example, towards the Ether, in the case that we see here. So this is something that is really very important for decentralized finance. Without it, it is very complicated. And the more we have minimal liquidity, the more gaps we will have. Of exchange, implied if I want to change an Ether and that in the liquidity pool there is only 1.5 Ether, well, it will be much more complicated to be able to make the exchange because there is not enough liquidity. And therefore at that moment I risk having a price mismatch. So I try to simplify greatly, but we really have to understand the role of these liquidity pools. We also talk a lot about Uniswap, and we also talk a lot about Curve. Why are we talking about Curve? Because it is one of the protocols that is integrated into other decentralized finance protocols. This is why I tell you that it is one of the pillars. Because precisely their liquidity pool is used, leveraged by many people, many other protocols which precisely use them to be able to carry out their transactions or to be able to redeposit funds. So what is the point of CRV, Curve's crypto? It is a governance token because Curve is a DAO. Therefore, it is a decentralized protocol with decentralized management. And the CRV allows us to make proposals, such as, for example, what is the liquidity pool that we're going to open, and above all is, what I am going to create is an incentive to be able to promote liquidity in this pool. We didn't ask ourselves the question earlier, but what is the point of depositing your liquidity in a liquidity pool? One, we have rewards. That is to say, we have a small portion transactions that are given to those who deposited the liquidity pool, and next to it, there is what is called incentive. The incentive here is the CRV, which will be distributed to those who deposit liquidity in the Curve pools. And we see that we are not very diluted. We only have 27% of emissions for the moment. So there are still a lot of CRVs to distribute. And the very principle of CRV is to determine which pools will be opened and what is the distribution of the incentive, therefore implying the new CRVs which will be created and distributed. And this is where you begin to understand a little bit the interest of the CRV in it and why there are what we call curve wars, because there is something very important. Let's say you are a developer or you have a Web3 project, you are going to launch a new token. This new token, you have to have liquidity. There have to be people who buy it and who value it. For this, you will potentially have CRVs or buy some, for example, to be able to offer your pool in Curve and to be able to try to have part of the incentive so that people buy your token and put it, for example, as collateral with Ethereum or with a USDT, any stablecoin. And obviously the CRV has all its appeal in it. This is why we also talk about curve wars. Because the more CRVs we have, the more weight we will have in the decision, and the more we will be able to direct the incentive to a place or an individual. This is why there is even a notion of a scrap, a notion where we will, for example, lend our CRV to someone, and in return, they will pay us a sum. This is what we really call snatch CRVs, in which the more CRVs you have, the more weight you will have in the decision. Therefore, the more financial weight your voice will have, and the more you can get paid this way. There. So on that, we have to understand this system well because it is very important. And above all, it comes into play enormously when we start to have a colossal influx of liquidity and a bull run in which we will necessarily have a valuation of the service which will be directly linked to the importance of the liquidity that will be blocked in Curve and everything that will revolve around it. And that's why Curve is used a lot in decentralized finance, because there are a lot of protocols that try to exploit the issuance of CRV to, quite simply, what we call farming incentives, farm CRVs. On the one hand, Curve is also a big hack in the news, more than $70 million which were stolen, 73 to be exact, simply because of a problem with a chicken, so there is always a risk. We always said that Curve was the protocol with which it had never been hacked. In this case, that's it, it's done. And the CEO, well, the founder, is not a CEO, but the founder. Curve managed to negotiate a return of 70% or 80%. I don't know more about the funds and directly. Himself reinvests part of his position to be able to reimburse all the people. But nevertheless, it was something that was very complicated because this co-founder had a lot of CRV which was made available as collateral to buy goods. So he had, for example, deposited 40 million, I think, or 50 million of CRV to borrow 5, 6, 10, 20 million dollars to be able to do shares. And so the more the CRV decreased, the more complicated it was and the more risk he had of liquidating his position. He managed to find buyers in OTC, therefore over the counter, so as not to impact the price of the CRV more than necessary, and therefore he managed to reduce the position he had, and therefore we had little liquidation. But there was a big scare that took place, and we must remember that centralized finance protocols are always risky products. This must be taken into consideration. So, we are going to attack the technical part, in which we also have to understand that we are not going to have all the data. We have a large part of the data, but sometimes a little bit of data is missing. So I left that in order to be able to compare. But nevertheless, here we still have a graph which is rather clean, in which we had an ATH which was colossal, but at launch, but with a liquidity which was really very good, so there's no point in looking at it. And for me, we have to take into consideration two things. One, we have a lot of tokens which will be issued, and this is the principle. It is the token which will be issued to be able to be dumped and repurchased when there is need to be able to create the implied incentive. It is a token which will have real value when we have a return of liquidity on the crypto market, because people will set up projects, they will want to promote their projects, and therefore the CRV will have intrinsic value, linked to the arrival of liquidity. So technically, what do we have? Technically, we simply have the implementation of an accumulation which is very clean with here an SC, the automatic rally which is carried out here, the small ST which is there, and there we are either in an ST or in an STB, all right? This is not yet validated for me. The break of this low with the break here of 0.3 tone will really be for me a key element in gaining liquidity, and we see that we are moving towards it with very strong momentum at the level of the RSI, which is downward, a compression here at the price level with the problem of the hack, which has in fact really accentuated the bearish acceleration. But when we look a little at the CRV, that's what is interesting, is that we have a token which is continuously being issued. And yet, when we look at this lower part here, we see that we had Celsius here, we had FTX, but all in all, we still worked well on the course. That is to say that even there, we could consider that we have a form of accumulation in SC, STB. Potentially a spring that could happen. So my general idea is to tell myself that here we are going to take this low, and we are going to have, in fact, a box in which we will have an interesting price below 0.3 to precisely expose ourselves to the CRV if ever we are interested. Afterwards, we must take into consideration that the CRV will be diluted. This is the very principle of Stoken. The CRV has a value because we can determine where the dilution will take place. Understand the connection between the two before exposing yourself. In terms of pure technique, what can we set as an objective? If we have a break, so really an end of accumulation, an accumulation which can still last a long time, an end of accumulation already. There is a first break which will be important. It will break the $2 for retest this level. There we will really have a key element to say that, okay, we are going to go back up there. The second element is the capture of the AR, so really the break of this level, therefore implying the break of the $7. Reserved at $7 there we can say that we are in a dynamic which is rather bullish, and therefore we will leave in a bullish form quite quickly. Afterwards, we must also remember that the tokenomics of CRV, here we are just going to get into the tokenomics of taking it back to give you the information, where we have 3 billion CRV on a diluted market cap. Take this into account when you do your pricing. That is to say that if we ever have a CRV which has $10, that implies that we have a curve which will be in the $30 billion, so which is already very significant for DeFi liquidity pools. Afterwards, we would really have to have a big valuation to go much higher. Implied potentially look for the $15-$20 in the $45-$50-$60 billion. Market cap, which would like us on much higher targets with a CRV which could be close to $20. But the new ATH there, it is not for right away. The $56 on 3 billion CRV tokens, we will have to have a lot of equity and perhaps have another additional cycle or a curve integration on something else. Especially since there, we had a hack of curved. So this implies that there is a form of trust that was broken precisely because we considered that curve was inviolable because by default it had not been hacked until then. So will we have as much liquidity on the next bull run on a protocol that has already been hacked? This is the big question that you will also have to ask yourself to control your exposure. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy. And we'll meet tomorrow for the weekly in which we will come back to, precisely, these smart contracts on BTC. Wouldn't this be the new narrative for the next bull run? That's tomorrow, 13:30.